Yes, people, very happy with all of you. So, guys, we're starting with a brand new chapter today, which is cash flow statement. To be more precise, this is not a standalone chapter, it is a part of your chapter number 11, which is preparation of the financial statement as per schedule 3. So, that was unit 1, and this is unit 2. So, this is chapter 11, unit 2, where we're going to learn what is and how do we prepare the cash flow statement. Guys, from the examination point of view, this chapter carries a good amount of weightage. Somewhere in middle, I'll be sharing you the weightage that all of these chapters carry, from the examination point of view, to get a precise idea about how the questions are being asked. So let's begin, people. So this is something, a topic which is familiar to all the 12th CBSE people, because we have studied in depth in 12th CBSE. For matriculation people, this is for the very first time you're getting exposed to this chapter, which is cash flow statement. Quite an easy one, but it is conceptual based. If you understand the concepts well, you can relate to this chapter very well. But otherwise, whatever we studied in 12 CBSE, 70 to 80% is same. 30% upgradation here and there. Almost 70-80% is same. So let's begin, people. The chapter's name is cash flow statement. So we have to first of all understand what is the meaning of cash. Second, we need to understand what is the meaning of flow. And third, we have to understand what is the meaning of statement. All set? Now, a cash flow statement is a statement. So it is not a ledger. It is not a ledger balance. It is not a form of P&L or balance sheet. I think it is an exclusive statement. Like how for BRS we had a statement, bank reconciliation statement, which is prepared exclusively apart from accounts. In a similar manner, this is something which is prepared after your financial statement preparation is completed. So a cash flow statement is a statement, first of all, not an accounts, which provides the information. Information about what, sir? Information about the changes. Changes of what? Changes of flow or movement in the cash. So what is the meaning of flow here? So flow means, so we are trying to understand what is the cash inflow and what is the cash outflow. Of what? Of the cash and cash equivalents. When I say cash, it doesn't mean only cash. It includes also cash equivalents. So we have to first of all understand what is the meaning of cash, and then we have to understand what is the meaning of cash equivalent. So one more time, people. Cash flow statement is not accounts. It is a statement which is individually prepared for some analysis purposes. So cash flow statement is first of all a statement. What does this statement do? So this statement provides us the information. This statement provides us what information? It provides the information about the movement in cash. So what do you mean by movement of the cash? Here we are trying to assess the cash inflows and cash outflows from various sources, from which all different sources we had the inflow of cash. And this inflow what came? Where did we apply that? Where did the cash outflow happen towards? Is what we are going to assess. So inflow and outflow of the cash and cash equivalence of a business enterprise is what is being assessed. And that cash inflow and outflow, you don't keep, with you. The assessment is not kept with you. This assessment needs to be bifurcated into 3 categories called as operating activity, investing activity, and the finance activity. Which means that once you try analyzing the various cash inflows, you need to place them either under operating activity or investing activity or finance activity. Now, what is the meaning of operating activity? What is investing? What is finance? Everything we have to learn. I'm just trying to give an outline perspective. Whatever cash outflows you are determining, now that also you need to categorize between operating activity, investing activity, and finance activity. Now, who is saying all this? Who says this has to be done? So this is said by Accounting Standard 3. In bracket, we call it as revised. Accounting Standard 3 has given us the requirement to prepare the cash flow statement. In what way the cash flow statement needs to be prepared? What is the objective behind that? All of that is laid down in your Accounting Standard 3. In other words, the cash flow statement provides a summarized breakdown. So what is the meaning of summary? We are yet to discuss. It provides a summarized breakdown of how the business generates the cash. When I say cash here, always it is cash and cash equivalent. Whenever I say cash here, it is cash and cash equivalent. So this data is providing you summary summary of how the business is generating the various cash inflows and how it uses the cash outflows. It is being given in a categorical manner. It is given in a very summarized manner. Based on that, we can make some decisions. It provides, means cash flow statement, Sumanyu provides the summarized breakdown of how the business generates the cash inflows and how it uses that cash inflow towards the cash outflows by categorizing them into three main activities, which is operating activity, investing activity, financing activity. And this helps the users of the financial statement. This cash flow statement, when you present to those 7 people, who are those 7 people? Users of financial statement, which is studied in the schedule 3. We are preparing the cash flow statement for those 7 people. So this helps the users of financial statement to draw certain analysis. Draw certain analysis means what? To get some analysis out of it to evaluate the liquidity or the solvency position of the company. Now, what is liquidity position? What is solvency position? Everything we have to discuss. So in short, what is a cash flow statement? Sir, a cash flow statement, first of all, it is a statement, it is not any accounting process. It is not, a journal thing or a ledger or a trial balance. It is nothing of the accounting process. It is apart from the accounting process that is being prepared to monitor the inflow and outflow of the money and its equivalent. Flow of what? Cash and cash equivalent into 3 categories called as operating category, which is operating activity, investing activity, and finance activity. So at the end, when you complete the presentation of the cash flow statement, from this, you can draw some beautiful analysis based on which you can make your decisions whether I should stay with this company invested or should I take my money and go away. As an investor, for me, this document is very important. One small example to give. There's one company whose turnover is 3 crores. There's one company whose purchases and all the expenses put together, instead of turnover, let me put this as revenue. Revenue is 3 crore and the expenses 2.5 crores. So please tell me, what is your net profit? 50 lakhs is your net profit. So when you look at the statement of P&L, you will feel that this company is profitable. But if I tell you that this 3 crore rupees worth of revenue what they've generated, in this not a single rupee is received so far. All the sale is done on credit basis, which means credit sale. And the expenses what you've incurred for this, there is no credit given by the vendor because you are a new person into the industry. So he cannot trust you. So you have raised the loan. And all the payments you have made it. So all these are cash payments. Now tell me, this information that this is credit sale and this is cash sale, you'll get where from? Cash flow statement. See, if the cash flow statement is not there, what will you think? Oh my God, this company is doing a profit of 50 lakh rupees. Excellent. And you'll be tempted to invest in this company. But this company which is profitable today, if they are not managing their cash flows properly, very soon what will happen? This company can go into loss eventually. Govinda, oh Govinda. Because selling the goods on credit is no big deal. Put a board outside. I'm giving all the goods, I'm selling all the goods on credit basis. Who will not come and buy, boss? Everybody will come and buy. So in business, how much important is to make the profit? Equally important is to manage the cash flows. So by preparing the cash flow statement, we will understand that whether the inflows are coming to the company properly on time or not. So are we having positive cash flow or are we having negative cash flow? So what is positive cash flow? What is negative cash flow? Everything will get an understanding from the cash flow statement. So this kind of understanding, we don't get it from your balance sheet. This kind of understanding, we don't get it from your P&L. So for that, we have to prepare an exclusive document called as cash flow statement. So it is an analysis document to analyze the inflow and outflow of the money in the business. I'll build a follow. So your cash flow statement is nothing but it is a summary of the cash and cash equivalent. Now you must be having a doubt here. Sir, you are telling that this cash flow statement is nothing but capturing of the inflows and outflows. But this data is already there with us, no sir? Somewhere they are able to recollect this data is already there with us. Where? Cash and bank. Sir, cash and bank account, sir. Cash and bank ledger, what you're preparing, boss, what is it? Debit what comes in, credit what goes out. So this is cash and bank account. If you look at this, debit side, debit what comes in. In means what? Inflow. Debit what comes in? Inflow. Credit what goes out? Outflow. Sir, and this data is already available to us. Then why are you preparing this another document called as cash flow statement? Why extra work, sir? Like that, how many of you have a thought process? Those who have done 12th with me already, who does know what is cash flow statement? You don't answer. Other people. Subhani says, wonderful. He's done 12th with me already. He's telling, sir, I have still doubts, sir. Sir, in cash and bank ledger, inflow, outflow is there? No, sir. Then why are you preparing the same information again, one more time, double work, called as cash flow statement? Okay, apart from Suman, anybody else? Yes, Abhi. Okay. What does your logic says? Not any. Yes, okay. What is your logic? Why do you think that this data is not sufficient? Adavade, this company is already having a cash and bank ledger. Despite that, they are going ahead and preparing cash flow statements. There should be some reason. So, what is your common sense says? Even if it is wrong, you can answer. It's okay. Okay. So, what happens? Correct. Okay, wonderful. She's got one beautiful answer. Yes. I'll tell one people what is her answer. I'll tell you. Yeah. Wonderful. Super. Both of them almost same answer they give. So what are they telling us, sir? In cash flow statement, you said cash flow statement is statement where we record all the inflows and outflow in three activities. That is operating activity, investing, and finance. So this type of categorization is not possible here. This type of categorization is not possible here. So there we get more meaningful information, more detailed information. It's more summarized information. Here everything is scattered. This is one point which is true. There's one more point. Imagine you guys are other investors. CA after that. Now this example, you guys are investors. So you guys are investors. KVA Limited, instead of giving cash flow statement to you, I'm giving the entire printout of cash and bank ledger, which is running in how many pages? Thousands of pages. Because in a business, cash entry, bank entry, how much in numbers? No limit, unlimited entries. So you said, sir, we are investors of KVA Limited. So we need to know whether your inflows and outflows are properly or not. So we want to evaluate, sir. So could you please give the data? Up next, what did I do? I took a printout of all my cash and bank ledger. Printout I gave you. How many pages? 1000 pages. Cash and bank, all transactions put together. Enjoy. What analysis can you do by reading 1000 pages? Because in cash and bank account, what happens? If I have to pass salary entry, let's say if I'm paying 12 months salary, 12 salary entries. If I'm doing 1000 purchases, so 1000 payment entries. And that too, if I'm getting the credit, I'll do in multiple parts, installment and credit option. Then I make the payment in multiple installments. So 1000 purchase means if I'm getting 2 installment means 2000 times I'll pass the payment entry. Now I'm getting money from different customer. In a year, 1 lakh customer comes to me. 1 lakh customer paying 1 lakh times money. So does this cash and bank ledger give you that information? Though it has got inflow, though it has got outflow, but to be an informed decision maker or to make an appropriate decision as a shareholder, as a banker, am I able to make some analysis or conclusion based on this cash and bank document? No. So hence we have to prepare the cash and bank ledger, the same presentation in a summarized format, which should be not more than 1 or 2 pages, which should give you a summary information. That is why we're preparing trading P&L and balance sheet. No, boss. Trading P&L is nothing but what? It is summary of your accounts, what you prepared. Accounting is a systematic process of identifying business financial transaction, measuring in terms of money, recording through journal, then classifying through ledger, summarizing through trial balance, trading P&L and balance sheet. So if I don't have trading P&L and balance sheet, if I give you my journal and ledger, you can still draw conclusion out of it. But is that going to be easy? No. Even though I give you all my journal and ledger, you cannot make proper decisions. Okay, if you're an accountant, maybe you can prepare the trial balance out of it, P&L out of it, balance sheet out of it, then you can assess. What about the non-commerce people? If I give them journal and ledger, can they do anything with this information? No. Hence, we said that no, we'll do summary of all the accounts. We'll prepare trial balance. From there, we'll prepare trading P&L and balance sheet because people like summarized version of it. So balance sheet now is one page. P&L is now one page. So we're getting summarized picture. Okay, income is coming from this source. Expense is going to this source. Like that, we have one page information. Oh, we have so much of tangible assets. We have so much of intangible assets. We have so much money in cash, so much money in bank. So when the summary information is there, which is 1 or 2 pages, it is better and easy for us to read, analyze, and make decisions. And hence, we cannot use the cash and bank account for the purpose of decision making. So this cash and bank account needs to undergo some format changing. Thereby, this concept of cash flow statement is being induced. Am I clear? Second thing is, with this information, which is so much scattered information, thousands of pages, I cannot make any decision out of it. But cash flow statement, one single page, 2 pages, I can make some beautiful information out of it. So I'm going to take now example 1 to make you understand how this cash flow statement works. Before that, I think the entire screen is visible to you. So please go through this cash and bank ledger. For your convenience sake, I've only incorporated very few items in the cash and bank account. I'm not giving 1,000 pages. Just one small document. Please analyze and tell me, is this company doing good or bad? Inflows are great or bad? If it is good, why it is good? If it is bad, why it is bad? Apply your common sense. This does not need the mind of a chartered accountant. A common person with common sense can definitely understand this and question it. So we are not common, sir. We are extraordinary, sir. And we don't understand the language of common people. Okay, bad. Kritan is saying bad. Okay, others. Okay. Tell me, Piyush, why it is bad? They raised a bank. What is wrong in raising a bank loan? Raising a bank loan is not bad, no? Bank loan, if you're raising and if it is for good development of the business, boss, why it is wrong? I don't understand. Okay.
The main activity of the business, the sale is 250, but the expenses is 350. So the main.
So what? Any business initial stage is need not be 100% profitable, no boss. His point was, sir, sale is 250, purchases is 2 lakh, and expenses is 150. So operating wise, we are like in the business itself, there is a negative amount, profit, negative loss. It is basically. So startups in the initial first case, if it is loss, we are okay with it. Which business on day 1 is profitable, or which business in year 1 is profitable?
So,
yes.
So they have bank loan of 1 lakh, sir.
Bank loan of 1 lakh. Okay.
They have debentures 60,000, sir.
Debentures 60,000. Okay.
And then they also hold an asset for 40,000.
So
this we can analyze that they are running short of money.
Okay. Very good analysis. Yes, boss. Same point. Okay. So with the limited data, you're able to do some kind of assessment. Now, same data, if it is thousands in numbers, this page, which I give you is a single page, not in single page, it is quarter page, boss. And I give you a summary. Oh, this much is my cash sale. This is my bank loan. I give you a summary information. In your cash and bank account, you have summary. Cash sales means there will be 1,000 line items. Cash purchase means another 1,000 line items. So it becomes very difficult for me to understand. So summary is very important. So that is the first objective of preparing the cash flow statement. So we get a bird's eye view of the cash inflows and cash outflows. And second, this presentation, even if you give summary, this presentation does not make any sense. This is summary, boss. Cash in bank account, what I give is summary. It's not the real cash in bank. This is summary. Despite giving a summary, this is not making sense. Are able to follow? Hence, experts felt that we have to give a better presentation to it. So experts felt that in the business, there are 3 broad activities. One is operating activity, means what? The operation part. That is the business activity. So CA.Prathik Academy's main business is what? Coaching. So whatever money comes in, inflow is coaching fees. Primary inflow is coaching fees. Second, if I sell the books, I get that also. So ancillary inflow of money. That is also my operation only, no bus. Then I make the payment to teachers. The money goes towards the rent, electricity bill, etc., etc. All these are related to my business. So all these are called as operational inflows and operational outflows. Any difficult to understand? So this is one segment in any business. Another segment is what? Investing segment. So we as a business do multiple investment. Investment is also different source. So investment is done in multiple places to generate some other additional income. So from the investing activity, that is from the non-core business activity, how much money you're generating? What is the inflows and outflows there? That we have to assess. So experts felt that, okay, we should have this as second activity. Third is your finance activity, because finance plays a very crucial role. Finance means what? Raising the funds of the business. I'll be discussing about this very shortly. Finance means what? Raising the funds of the business. No business can function without money. Business needs initially money. So what are the two broad category of resources for raising the funds? So one is capital source, equity share capital, preference share capital, the money coming from the owner. Second, the money coming from the external parties in form of debt, borrowing. So these are two primary sources. So this also has been given as a separate activity. There's a logic, there's a reason behind it. So once you do analysis of the cash flow statement, you'll understand the essence of what is the beauty of these three activities. However, analysis of cash flow statement is not a part of our syllabus. It is there in your financial management. And how much religiously you do that, that also I don't know. But yes, cash flow statement is a part of, cash flow statement analysis is a part of your financial management. But as a CA, we should definitely know to analyze the cash flow statement. So in the financial management, you should understand, but how much effectively they teach or how much effectively you concentrate on the analysis, I don't know. So experts believe that all the transactions could be categorized in these three activities. Beyond these three activities, there's nothing else to make sense. So now, looking at this information with whatever I gave, I've not told you what is operating activity yet. I've not told you what is investing finance yet. I'm yet to discuss everything one by one in depth. I'm just trying to make you understand that how do we prepare the cash flow statement, just an outline perspective, and what objective we achieve. So I have to explain the objective of preparing cash flow statement now. So with this example, I'll conclude what is the objective of cash flow statement. Okay, then I'll go one by one. What is the meaning of cash? What is cash equivalent? What is operating activity? What is finance activity? Multiple examples we'll do. Then we'll go to big questions. So now, two balance brought down. So can I say this is opening balance and this is closing balance? Leave it. Cash sale, based on whatever I discussed so far, which do you think is appropriate classification? Operating, investing, or finance?
Operating.
Online people, please participate.
Yes, sir.
Which activity you feel is more appropriate? Can I put cash in the finance activity? Did I raise the finance from the customers? No. Is this financing? Financing means what? Raising the money from shareholders, raising the money from the public bankers, etc. Did I raise money? No, this is the main business I did. From that, I got the cash flow. I've done the sale, which is the inflow from my business operation. So if I say this is operating activity, do you have any problem?
No, sir.
12%
Sir.
banking. Sir, anything which is coming in debit side is inflow. So we are talking about the inflow. Inflow under which activity? Operating activity. 12% bank loan. Bank loan means what? I'm financing my business.
Financing activity.
I don't have sufficient money in my business. So I'm going to bank asking for a bank loan. So I'm financing my own business. So what activity it sounds like? Financing activities. 9% debenture. Sir, again, money was not sufficient. I have taken the borrowing from the public and against it I've issued debentures. Finance activity. Again, money was not sufficient. I had to sell the assets to raise the money. Asset. Always when you make the investment in asset, it is investing activity. If I have any fixed asset in my business, which means I have invested in my asset. Even though this I'm going to use for the business purpose, but still be categorized as investment activity only. So this is your investing activity. What is investing activity? I'm meant to discuss with you. So 4 cash inflow, 1 from operating activity, 2 from finance activity, 1 from investing activity. Okay. Next, cash purchase.
Operating activity.
Purchasing of goods is a part of my business operation. So it is my operating activity. Cash expenses is paid during the business operation. So this is also operating activity. Advance to friend. Loans and advances given.
Financing.
Advance. In return, what am I expecting? Something interest. Something as interest. So I'm investing. Advancing is as good as investing. I'm expecting return against it. So this is also investing activity. So how many cash outflow? 3 cash outflow. Clear with this? Now, I'm not teaching you the format of the cash flow statement. As a common man, I'm just going to categorize them together and see category wise, am I having a positive cash flow or a negative cash flow? I'm not teaching the cash flow statement yet. Cash flow statement for the year 31st March 24. What is my first heading? So cash flow from operating activity. I'm not teaching anything. I'm just discussing the information. So under operating activity, how many information have people? 1, 2, 3. We have 1 inflow and 2 outflow. Loudly, 1 inflow and 2 outflow. Now, unless and until you participate, I will not get energy. If I don't get energy, what will happen? The concept will go for a toss. I will somehow finish this without concept. Do you want to go with that? So the more I am energically pepped up, the more information I would love to share. So what will be your role here? Answer loudly. Answer panna mattum parda. Loud answer panna. I want to see the energy. So cash sale is 250. Wonderful, sir. Cash sale 250. Inflow, outflow. Inflow. Whatever money came in, what happened? Sir, you paid all the money for the purchase of the goods. So 2 lakh rupees cash purchase. Less 2 lakh rupees. So what is the balance money in hand? Balance money in hand. 50,000 is left, sir. And how much money did you pay for cash expenses? Rent, electricity, etc., etc. Sir, 150 spent, sir. So if that 150 also goes, what is the money left in your hand? So it is negative 1 lakh. Means what? I had only here 50,000 in hand. I wanted to pay 150. So which means from some other source, I raised the money, and from there, I got some extra inflows. No, that inflow I've used to pay this outflow. So how much extra money have you used it? 1 lakh rupees was not sufficient from your operations. You took help of either investing activity or finance activity. From those two places, you got some inflows. Nothing wrong in it. If this business is a starting business, starting year, every year, first year, second year, people have that starting trouble of the business. I'm okay with that. But if this continues in year 3, year 4, year 5, year 6, year 7, year 8, year 9, then boss, something is wrong with the business model. As Kritin rightly says, wind up, wind up, wind up. Now, here, this is a little bit alarming, but I'm still okay with it. Next, let's have a look at the cash flow from investing activity. So what we have done, we are running short of money. We could not recover the money from the customers. We could not produce more sales. We cannot do more sales. Hence, I had to sell the assets or any investment for that matter. And I generated 40,000 rupees. Sale of assets sold. This asset sold could be either, investment, or it could be fixed asset, anything. But this is a concern to me. Selling the assets and generating the cash flow, how logical it is. Did I start this business that one fine day? Okay, I'll sell all my assets one by one. I'll make all the payments. So now this is an alarming situation where the business has started selling the fixed assets so that they can make their monthly payments, yearly payments. Now this is something which is dangerous. Then loan to a friend. This is dangerous or dangerous. Super duper dangerous. Donkey fellow, he does not have the own money to pay for his own expenses. He's borrowing money from somebody and making the loan to friend. Wonderful idea. Any person who does not have the money to take care of his own self, will he take care of his friends? Macha, money venuma? Yavla venu 1.2 lakh, my dear friend. Oh, number 2 friends. College days, we are very thick friends. So for you, what I will do is, I'll go to bank. I'll ask, request, beg, and get loan for my business in my name. I'll give you my loan to you. Wonderful. You don't worry, Macha. Where do you want to go with this money? My girlfriend is in States, United States. States means United States. I have to go and visit her, Oh, like that. No problem, Macha. I'll sell my asset also for that. 40,000 worth of asset also sold. Now tell me, if you're an investor of this kind of company, what will happen? You guys have any such flashbacks? No? Okay, then okay. This is super duper dangerous. This kind of information or assessment did you get from this ledger? This ledger, even though it was a summary ledger, you could not make any informed decision making. Now here this is giving a better picture or not. Further, cash flow from, okay, now if you see loan to friend, 1.2 lakh gone out. Means what? Here also there's a shortfall of 80,000 rupees. Means even by selling the asset, you could not pool enough money required to sponsor your friend's flight ticket for meeting his girlfriend. So here also 80,000 negative cash flow. Super duper dangerous situation. Cash flow from finance activity, which means here also I'm having a shortfall. Here also I'm having a shortfall. Now, from where this person has raised the money? Sir, two places, sir. One, he has taken loan from the bank. Second, this was not sufficient. And banker knew that more than this, if I give the money, gone. So now what did we do? We issued debentures. Investors, please come to our company. We're issuing debentures. We'll give you, what is the debenture interest rate? 9%. Appa. For instance, to attract more people, 30% I'll give you interest. Who gives 30%, boss? Bank interest rate is how much? 6%, max to max 7%. Where is 30%? Now, all those who want to sit at home, finance the money and earn money out of it, for them, this is jackpot. 30% means if I give 1 lakh to this person, 30,000 per month I'm getting. Even if I go to job, that much money will not come to me. Only by investing 1 lakh. If I give 10 lakh, oh my God, 3 lakh rupees a year. Sorry, no, I said monthly, no. Yearly 3 lakh. If I give 1 crore into 30%, how much? 30 lakh. As a CA, if you earn 1 lakh rupees per month, maximum in a year, 12 lakh. This guy is giving 1 crore rupees and getting how much? 30 lakh. Now, in his eyes, the dollar symbol will come. Gone. Debenture issued. Poor fellow doesn't know that this money is not going to come back. 60,000 money raised in form of debenture. So now 1,60,000 cash inflow. Now tell me, people. Now when you look at this data, how do you feel this company is doing? Will you consider investing in this company? Will you consider investing in this company?
No, sir.
Why no? What is your observation, boss? Tell me. Sir, first observation itself is that, let's say this is the 4th year of the business. Sir, even in the 4th year of the business, at the operational level, they are still having negative cash flows, which means they are not able to generate that much cash, which is required to pay their business expenditure itself. Oh my God. First negative point. Second, for sponsoring this, they are going and spending, they're going and selling all the assets. It is not acceptable. And on top of that, cherry on top of the cake is that சொந்த பிசினஸ்க்கு ஸ்பான்சர் பண்றதுக்கு வந்து காசு இல்ல. He is going and sponsoring for his friend. Oh my God, this is biggest disappointment. And for that, you're taking a bank loan and issue of debentures. How much percentage interest you gave for debenture? 30%. Insane debenture. Which prudent businessman will give 30% interest? In Tamil, we say no, kandavandi. Correct, no? That is all 24%, boss. In reality, people pay 24% to 30%, 35% per annum, I'm telling you. So that kind of a loan you're taking for the business, is it good for the future of the business? No. So this kind of information I'm able to draw from the cash flow statement, which otherwise is not available to me in the cash and bank ledger. Now, if you see 1 lakh, that is minus 1 lakh, minus 80,000 and plus 1,60,000. Total is how much? Minus 20,000. So I have negative net flow. Net flow means what? All the 3 activities, whatever I had, I added all of them together. That is called as net flow. That is operating activity, investing, finance, whatever the item is there, all the 3 I added. So minus 1 lakh plus of minus 80,000 plus of 160. So negative overall, negative 20,000 rupees. So which means for this 20,000, there's a deficit. So this value you utilize from your opening balance. So how much was opening balance? 50,000. So plus 50,000. So how much is your net closing balance? 30,000 rupees. So basically it's nothing but in the cash and bank ledger, we have opening balance here, no, which is 50,000. Closing balance is 30,000. And all the activities which are there individually here, no. In cash flow statement, what did we do? These activities we categorized. All the debit transactions and the credit part of the transaction, that is cash and bank ledger, we summarized under operating, investing, and finance activity. So all these now became one single amount, which is called as net increase or decrease in cash and cash equivalent. That is net flow of all the 3 activities. With that, what we got? We added opening balance so that we get the closing balance. So now, if you see this, can you please add me all of these? 4,50,000 rupees is your net inflow. And how much is the outflow? 4,70,000 is net outflow. So 450 minus 470 is how much? Minus 20. Same thing we got. Here I did the total inflow minus total outflow. In cash flow statement, we split this inflow into 3 parts. We split the outflow into 3 parts. That's what we did. So basically, this part is there, no? This part we have put in the cash flow statement. So if I take all of these part into cash flow statement, what am I left with, boss? I am left with opening balance and closing balance. I am left with opening balance and closing balance. So whatever the final net flow comes, with that you will add opening balance and automatically it should be equal to the closing balance. I'm just trying to give you an outline picture of how the cash flow statement works. We have to go into the intricate details. I'm just giving a summarized version. So with this, what you understand, sir, what is the objective of cash flow statement? So with this cash flow statement, one thing I understood that I'm able to categorize the inflows and outflows in a very meaningful way. Here, all the inflows were categorized together. So I could not draw any conclusion. This information is not available to me in trading and P&L account. Tell me why. Because in trading and P&L account, you don't have the inflows. You have your incomes there. Because we prepare the accounts on accrual basis. Accrual basis means what? Record all the income, whether money received or not received. Here, I'm recording only the receipt part. In trading and P&L, record all the expenses, whether paid or not paid. Here, my focus is only on the outflow of the money. So this kind of information I'm not getting from trading P&L, boss, nor I'm getting from balance sheet. Here, I'm able to understand what is my pure cash inflows from different activities. Forget line-wise items, at least activity-wise. From the operation activity, I got 1 lakh or I spent 1 lakh over extra. So I'm able to draw some conclusion. Cash flow from investing activity, how much money came in and how much money went out. Inflow and outflow, I'm able to assess activity-wise. That information is not there in trading P&L balance sheet and nor even in cash and bank ledger. Here, I'm able to assess the inflow and outflow of the finance activity. This information again is not available to me in the financial statement. So first, I'm able to understand the inflow of the money. Second, I'm able to assess the outflow of the money. And third, I'm able to assess my net inflow. How much is my net inflow? Am I net positive or net negative? I'm telling you, I'm able to assess that. Third, I'm able to see whether this company is having the sufficient revenue generating capacity or not. So what do you think is the liquidity position of this particular enterprise? Liquidity or solvency position? Good or bad?
Bad.
Very bad. So here, the person is relying on the funding of either finance activity or the investment activity to take care of his own operational expenses. And I'm able to see that whatever money is raised in form of loan and proceeds of issue of debenture, he's investing in some unnecessary activities. So this is helping me to draw some extra information. I can find out the loopholes in this cash flow statements. The loopholes what the company is created for its own self. So that I'm trying to assess, read it. And now I'll speculate if this is the activity and behavior of a company today, what will be the plight of this company in the future? Everybody can understand this. So that kind of information this cash flow statement gives. So I'm able to understand the objective of preparing the cash flow statement. To just make you understand the objective of cash flow statement, this entire thing I had to do. So I'm able to get information, better picture of the inflows of the money. I'm able to get the better pictures of the outflows of the money. I'm able to get, because of that, the net inflow details. Am I net positive or net negative? Third, assessing the items independently, I know that whether I've used my inflows to the best of my efficiency or not. Or have I underutilized my efficiency? Am I collecting the money on time or not? I give you an example. No? Here, this business has generated 3 crore revenue, but everything is credit sale, boss. So it means cash sale is zero. Or receipt of money from debtor is zero. Or even if you receive money from debtor, how much do you receive? Let's say out of 3 crore, let's say you receive only 10 lakh rupees from debtor. So 10 lakh money you received, operational activity. How much money you had paid to the creditor? Full 2.5 crores. So how much is your net flow? 2.4 crores is still outflow negative, boss. Imagine out of 3 crores, you collected 1 crore from the debtor. So collection of money from debtor, what activity? Collection of money of debtor is inflow, no? Inflow should go where? Cash flow statement. All the inflows, all the outflows should go to your cash flow statement. So I have collected from debtor 1 crore rupees. I have sold 3 crores worth of goods on credit. So full 3 crores is not going to come. It is not going to be practical. From 3 crores, something came. How much came? 1 crore came. Boss, collection from debtor is 1 crore rupees. It will go to my operating activity. Cash flow from operating activity. Collection from debtor, how much? 1 crore minus payment to creditors. All the payment to creditors is on cash basis. So 2.5 crore gone. So how much it is? 1.5 crores negative. Which means you are not good enough to collect the money from your debtors. 3 crore may say only 1 crore you have collected. What happened to remaining 2 crores? Why the money has not come? You will be able to ask the question to the company in the AGM. Because when you go to AGM, you have the financial statement with you, no? And the financial statement of company comprises of balance sheet, statement of P&L, cash flow statement, notes to accounts. So looking at this, you can raise questions. Why, sir, remaining 2 crores you didn't collect? I will understand the importance of this statement. Very, very important this is. So this is the objective of preparing the cash flow statement. If this is understood, I would like to go forward. Is this clear?
Yes.
Can I tell you something? The cash flow statement that you're seeing on the screen, no? This is actually the way you prepare the cash flow statement. But not under indirect method. It is direct method. Oh my God. So which means you just now taught us how to prepare the cash flow statement. The answer is yes. So there are two ways in which you can prepare the cash flow statement. Who is recommending this? Accounting Standard 3. I'll be discussing about that. One is direct method, second is indirect method. So what we just saw now was direct method. I'm yet to teach direct method. Okay. I'm just telling you, in direct method, you take the cash and bank account detail as a base and prepare the cash flow statement. This is pure direct method, what I taught you. But I'll teach you properly one more time also. I'm just giving you an excitement information. You have already learned what is direct method. Practice is left. But from my side, proper teaching will be done one more time. Okay. Can we continue?
Yes, sir.
Wonderful. The cash flow statement helps us to understand the cash generating ability of the enterprise. So the two examples what we saw now, what was the ability of the enterprise in generating the cash? Very poor ability. To the extent where you're dependent on the investing activity or the finance activity for funding the business. How it is that? Very bad, sir. Very, very bad. Wonderful. Example. A company purchased goods on credit for 1 lakh. Sold on credit for 250. Sold on credit for 250. So 1 lakh you're buying goods on credit, sold for 250. So as per accrual concept, the company made a profit of 150. But if the company subsequently fails to collect money or delays the payment to creditor, it may hamper the going concern of the business. Hence, it is very important to prepare the cash flow statement. Spelling mistakes are there, I'll correct it. Don't panic. Now, look at the focus. Focus on the main point. What are they telling? This is a company who has purchased the goods on credit for 1 lakh. Sold for 250. So what is the profit? 1,50,000 is profit. Because we are supposed to prepare the accounts on accrual basis. Means what? Record income whenever they are earned. Money receiving is not the criteria. Record the expenses when they are incurred. Paying is not the criteria. So by that virtue, I made a profit of 150. So company has made a profit of 150. But if the company subsequently fails to collect the money on time, and since the money is not coming to us in time, you have to raise the money from investing or finance activity. From there also money is not coming on time, then you will delay the payment to creditor. If you delay the payment to creditor, your relationship with the creditor will go for a loss. I will understand the scenario. I'm telling you a scenario where the company is buying the goods on credit now. A person is trusted you and gave 1 lakh worth of goods on credit. You said, sir, give me 2 months of time. Within 2 months, I'll repay the money back. Now the problem is within 2 months, you sold the goods on credit, but you could not collect this money from debtor. So you went to the banker asking for bank loan. That also could not be arranged. You wanted to sell asset, but nobody gave you a better rate. So you could not sell asset also. Now what happened? On the date of payment, on the due date of the payment to creditor, I don't have money, boss. What will you do? You'll go and request him, give me 1 more month. He'll give 1 more month also. In that 1 month also, you cannot arrange money. Nor the debtor give you the money, nor the bank give you the money, nor you could sell any assets or investments. Now tell me, second time, if you go and ask 1 more month, what will that person do? BPL. What is BPL? Bus. Bumpelat. Means what? In email vandradani. Adichu pirichi thalli utruva. Which means what? Not literally, your relation with that person gets, crack. Next time, with what face will you go and ask him the credit, boss? Which means, because of your improper cash flows, Since you did not maintain your cash flows properly, you did not honor your commitment on the due date. Even though the extended due date was given, still you did not honor your commitment. Now, when the business needs the goods on credit, the person will not supply the goods on credit because the trust of that person on you is lost. And with that, your business is going to get affected. Had I made the payment on time to the creditor, next time if I go and ask, he will definitely honor us and give us more goods, 2 lakh, 3 lakh, 10 lakh worth of goods on credit. So when I was working in the previous company, you will not believe, the company was purchasing some materials from Bombay, 100% advance payment. And the product what they used to sell it on credit, and they used to get the money only after 15 days. Once I joined the company, my role was, I was the head of the finance and accounts department. My role was to take care of accounts finance aspect of the business. But since that person was a North Indian, right? And I was good at talking to people. So my dad said, Pratik, can you just talk to this person and get us some credit period with this person? Because my dad was a South Indian guy, and he was not able to gel up that much with that Bombay person. I was like, Gupta ji came to Majama. This conversation started. You will not believe, within a span of 2 months, I built a very good relation. How the relation is built, I'll tell you. Before me, whenever the material was taken from Bombay, on the due date, my company never made the payment. Because they had a cash flow crunch here and there. To manage things was very difficult. I told that, see, whenever you want to buy product on credit, you negotiate the credit period to best of your ability. You ask even 1 year credit period, nothing wrong. But the day the person grants you the credit period, no, that due date never dishonor the commitment. If the dishonorment of the money is done on the due date, no, the trust is gone. So first I ensured, the first thing what I did in the first 2 months is to ensure that he's getting the payment as committed. So that gave a good trust on me first, not the company. He's like, Pratik bhai has come, he will ensure that the payment is coming to me. So I built a good trust of that person first on me. Then once that relationship is built, then what do I do? Sir, 15 months credit, sir, please. Promise, 15th day end or 16th day morning, I will make the payment to you. Promise. And I made the payment. Though the company had, cash crunch here and there, but I told, no, for this part, you have to make the payment or else the trust is gone. Once the trust is gone, we will never get the goods on time. So never do that. So here and there, some other payment we adjusted, but I ensure this person gets the money on time. Like that, every time it continued. You will not believe, over a period of 1 year, the credit period went up to 90 days. Means from the advance payment, within a span of 1 year, I took that to 90 days credit period. And the outstanding amount at any point of time, if you see in the debtors ledger, for that person will be at least 50 to 60 lakhs. Which means somebody else is investing his capital in our business. Correct? No? You are using that 50 lakh worth of product, boss. And who's sponsoring for that? The money is gone from his pocket. 90 days, the money is being invested by that party. So this is the beauty of the cash flow. So if you handle the cash flows properly, and over a period of time in this 1 year, we organized inflows and outflows. We organized in a very good manner. So where we were having negative cash flows, we started getting positive cash flows from the business. So one person, I cannot do anything. The cash flow should come from whom? Sales department. So marketing department has to generate the leads. The pre-sales department has to convert the leads. Sales department has to further convert the leads. And they have to get the money from the customer. So that is their part. But overall, as a businessman, we have to take care of everything, no boss. So that important these cash flows are. So if cash flows are not handled properly, the inflow and outflow are not timed properly, gone. I'm telling you a practical example. So if the payment to the creditor is done delayed, it will hamper the going concern of the business. Hence, it is very important for us to prepare the cash flow statement to understand the inflows and the outflows. Are we having any negative cash flows or not? And the timings is also very, very important. If this is understood, can I go forward? No energy.
Yes, sir.
No
Yes,
energy.
sir. Yes, sir.
No energy. Now, cash. Meaning of cash. Sir, what nonsense. 11th we studied with you, 12th we studied with you. Now, foundation also over, intervals we come. You are now coming and explaining what is the meaning of cash. What nonsense is this? Now, last chapter, schedule 3. There you explained what is cash flow, sir. My dear, that was cash from the point of view schedule 3. Cash equivalent, what is said was point of your schedule 3. So AS3 has got its own meaning of cash and cash equivalent. AS3 says that the cash comprises of cash on hand. Very simple. Demand deposit with bank. So what is the meaning of demand deposit with bank? Demand deposit means what? The money that I've deposited in bank. Whenever I use the word deposit, people think it is fixed deposit. No. My money with the bank means what? My money is deposited with the bank. So my money could be in savings account with the bank. My money could be in current account with the bank. My money could be in fixed deposit with the bank. Any deposit for that matter, or anywhere, in any form. So my money with bank is called as deposit with bank. What is the meaning of demand deposit? Demand deposit means whenever I ask or whenever I want, if I can take the money from the banker on my own will without the permission of the banker. Demand means what? Whenever I can take money from the bank without the permission of the bank, that is called as demand deposit. So whatever money is there in savings bank account, do I need to ask the permission of the banker? Banker, give me 1,000 rupees, 10,000 rupees. Boss, my account, whenever I want, I'll swipe the debit card. I'll swipe the ATM card, withdraw the money. I'll swipe the credit card, use the money. So the money in savings bank account is under our control. Though it is there in the possession of the bank, but it is with my control. So it is demand deposit. Current account balance, whatever money is there in current account balance, I need not get the permission from the banker to withdraw the money. So these both are called as demand deposit. There's one more thing called as flexi deposit balance. If you come to the real world, when you start dealing with the bank, you'll understand that bank has got multiple types of deposits to attract you towards them. There's one such thing called as flexi deposit. Flexi deposit means what? I can put a fixed deposit, but whenever I want, without taking bank's permission, I can use that deposit money. Before that, let me explain what is fixed deposit. Fixed deposit means what? Whatever the surplus money is there in the business, I give it to the bank. Banker against that will give me interest. So generally, these fixed deposit comes with a lock-in period. Means what? If I'm putting this FD for 3 years, 3 years I cannot withdraw the money. Impossible it is. These are kind of called as tax saver deposits also. Second type of FD is what? I will give the money to the banker. Banker will give me the interest. There's no lock-in period as such, but if you withdraw the money before time, let's say I put the deposit for 3 years. If I break it before 3 years, they'll give the money, but they'll charge penalty. And I have to do some formalities with the banker. Without the formalities, I cannot withdraw this. Flexi deposit means what? I can put the deposit whenever I want. I can withdraw whenever I want. Nobody to ask me. No permission, no documents, no penalty, nothing. Means I'm getting interest higher than the savings rate in this flexi account. And I'm not bound by the regulations of the banker also. Which means whenever there's a shortfall in my current account balance, automatically my current account balance will use my flexi deposit. For example, let's say in my current account balance I have 1 lakh rupees. And in flexi deposit I have 3 lakh rupees. The moment I make a payment of 1.2 lakh rupees, what will happen? 1 lakh will go from here and 20,000 will go from flexi deposit automatically. And this automatic deposit or this automatic payment does not happen in your normal deposit. It happens only in flexi deposit. That's why the name is flexi. Flexi means what? Flexible deposit. Means if there is a shortfall in your current account balance, while making the payment, automatically the current account balance will use your flexi deposit money. But it is a normal fixed deposit, then your current account cannot touch your fixed deposit. So which means all these three, can I say demand deposit with bank? Tell me yes or no.
Yes,
Tell me yes or no. Yes. So this is the meaning of cash, your accounting standard 3. If this is understood, can I go forward?
Yes, sir.
Online people, can I go forward?
Yes, sir.
Yes, sir.
Everybody,
Yes,
please
sir.
open your mouth and respond.
Yes, sir.
Wonderful. Sir, anything which is equivalent to cash. It's not cash, it is equivalent to cash. If I give an example, check in hand. Check in hand. Though it is not cash in hand. Though it is not cash, but it is like cash in hand. It is equivalent. If I go and deposit, I'll get money. Draft in hand. Draft concept is now not there anymore, but still it is prevailing. People don't use it. That's a different story. But demand draft is still there. When we were registering with IC earlier, I'm talking about 2009 and 2010, we never had this system called as online payment. NEFT, RTGS, GPay was not there. So when I was registering for my CA Foundation, CA Intermediate, the amount that I'm supposed to pay to Delhi ICI, I will take a demand draft out for that. So demand draft is basically I go to any bank. Not necessary I should have account in that bank. I can walk up to any bank randomly. If I have to make a fee payment of, let's say, 15,000 rupees, I will hand over 15,000 cash to whom? Banker. Banker, against that, he will prepare a check-like document called as demand draft. He will give it to me. And for that, he will charge 100 rupees commission for doing this work. Because nobody does free of cost work. So for the 100 rupees, he charges me. Now, what will I do with this demand draft? I will courier this or speed post this to whom? ICAI. Once ICAI receives this, they will go and give to the bank. Any bank where they have the account. Any bank where they have the account. They go and deposit this draft in the bank. Against that, the banker will give money to the ICAI. So now ICAI has got this draft in hand. So that draft is what? Cash or cash equivalent? It is equivalent to cash. It's not cash. It is equivalent to cash. It is not less than cash also. It is equivalent to cash. Are able to understand? Even though the concept of demand draft is there, but it is not much use because everything is now GPay, phone pay. It is very faster way of making payment. No? So who will go to bank, pay the money, get the draft, speed post it, till that the person will change the customer and go. So this concept is nobody using now. Now, this is where the change is happening. The change between Schedule 3 and AS3 comes here in this particular point. Short-term investment is also your cash and cash equivalent. Oh my God. It is not cash inflow and outflow. Investment of short-term in nature, where in marketable securities with no risk in change in value is your cash and cash equivalent. This cash equivalent. What is this? We'll understand. Short-term deposit with bank. Oh my God, sir. Again, this also deposit, short-term deposit with bank. It is not investment. As per Schedule 3, it is investment, boss. But here, as per your AS3, it is cash and cash equivalent. So understand the difference between both. Now, why these both are cash equivalent? For that, we have to understand these 3 points. What is cash equivalent? It means those which could be readily convertible into cash. Any cash equivalent which I can convert into cash aram se without any problem. That is called as cash equivalent. Check in hand. If I go and deposit, I'll get money. Draft, demand draft in hand. If I go and give it to banker, banker will give me money. So I can convert into cash without any hassle. With no terms and condition, easily money will come to me. That is called as cash equivalent. Plus, you have to satisfy 3 conditions. This is what is the differentiating point between Schedule 3 and AS3. Oh, Schedule 3, AS3. 3 both. Wonderful it is. Mokka joke. No problem. I'll try for a better joke next time. Very short term. Means what? The investment what you're doing should be maturing up to 3 months from the date of acquisition. So if you have done any investment, let's say anywhere, and if that could be convertible into cash readily, and that money can come back to you within 3 months of you investing into it. So today is what? 12th of April. So from here, 12th of April 2025. From here, 3 months means what is my end date? 12th of June 2025. July. Okay, sorry. July. 4 to 5, 5 to 6, 6 to 7. Correct? So this is my today investing date. If this money comes back to me easily, I can convert into cash within 3 months. Then that investment is no longer your short-term investment. In AS3, this becomes your cash equivalent. It becomes your cash equivalent. This is only one of the conditions. Remaining 2 conditions are pending. Listen to me very carefully. First condition means what? If you're investing money anywhere, that money should come back to you or it should be converted to cash easily. And the maturing period should be up to maximum 3 months. So if it is maturing in 1 month, then what happens? Donkey fellow. That's why I said up to 3 months now. Up to 3 months means what? 1 month maturity, 2 month maturity, 2.5 month maturity. Everything is what? Cash equivalent. One condition satisfied. Second condition, it should be highly liquid. Highly liquid means what? It should be convertible into cash quickly. Highly liquid means what? It means what? I can sell it easily and can convert into cash easily. 2 conditions. Third condition, no risk of change in value or very low risk of change in value. Means what? If I deposit 1 lakh, this 1 lakh should be 1 lakh only when I sell the investment. It can be more, but cannot be less. More also is not advisable, but it's okay. That is not bad. But below 1 lakh, it should not go. If this investment, what you're doing for 1 lakh, the chances are there that this can become 50,000, or the chances are there that it can become 0, then which means it has high risk of change in value. Means whatever value you're putting, whatever the investment value you're putting, there are chances that it might change and might become 0. If that risk is there, third condition is violated. Then this investment cannot be your cash equivalent. Then it becomes your investment activity. Am I loud and clear? One more time. I've done investment. I've done an investment. And this investment, you have to tell me whether this is current, non-current, or in current, it is cash and cash equivalent or not. Okay. First condition, that whatever money I'm investing is highly liquid. Means what? Whenever I want, I can convert it to cash easily. Any problem in this? Okay. First condition satisfied. Second, this you should be able to convert into cash within a span of 3 months, which means from the date of acquisition, from the date of investment, maximum time period to get that money back should be how much? 3 months. So if you're getting this money back up to 3 months, this condition also satisfied, then it is my cash equivalent. Plus, whatever money you're investing, the change in value of that, the risk of change in value is either no risk, which means what? I invested 1 lakh, I got 1 lakh back. I invested 1 lakh, I got 1 lakh back. No risk in change of value. Means whatever I invested, same money I'm getting back. So I have not got my changed value. So there is no change in the value of the investment. Or very low risk of change in value. Means 1 lakh I invested, I'm getting 99,990 rupees. 10 rupees some withdrawal charge. Is it very insignificant here? No, it's very insignificant. So even if there is a change in value, it should be very, 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 very low. 10 rupee, 20 rupee, 30 rupee, depending on your materiality. If all these three conditions are satisfying, then this is your cash equivalent. It is your cash equivalent. Out of this, if any one condition also is not satisfying, means one condition also not satisfied, then it is your investment. And depending on the nature of investment, you will classify this as current or non-current. So which means for you to classify something as cash equivalent, or for you to classify an investment as cash equivalent, all these three conditions needs to be together satisfied. So what is my first condition be? Should be very highly liquid. Means what? I should be able to convert that into cash very swiftly and easily. Second, the maturity should happen up to 3 months or within 3 months. Within 3 months will be wrong because they're giving you up to 3 months. Even on 12th of July also I can withdraw the money back. Within 3 months means what? Before 12th of July, you have to compulsory get the money back. So that is a different meaning. Up to 3 months means what? Till 12th of July, I have time to get my money back. So till the due date, up to 3 months, if I get the money back, it is cash equivalent. And third condition, the money that you've invested, there should be no risk of change in value or very low risk of change in value, which means whatever money I invested, almost 99.99% same money I should get it back. If more, I have no problem, but it should not be less. Example, bank FD. You put the bank FD for 2 months. You put bank FD for 2 months. Wait. Now, you should ask, sir, how is the liquidity position, sir? So how is the liquidity? Which means whenever I want, can I withdraw or have you done a lock-in period? If I have done a lock-in period, but if 2 months my money is coming back, then no problem. But for selling this, I have a big problem. Converting this into cash is a big problem. Then liquidity is not there. Then this condition is gone. But I'm telling you, no, liquidity is there. Means what? I can convert this into money easily. Bank FD. Once 2 month maturity over, I can go and withdraw the money. No problem. Very short term period. Correct? No, because 2 months. It's very short term period. And third, is there any risk here? Bank FD, what risk, boss? Whatever money I put, I get more than that only. Never I get less than that. So there is no risk of change in value. So what is the classification? Cash equivalent. Now you're putting a bank FD for 3 months. 3 months is short term period. And money in bank FD comes easily. Not a big deal. And there's no risk in change in value. In fact, my money goes more only. It never becomes less. So what is this? Cash equivalent. Bank FD for 3.1 months. Sir, liquidity okay. No risk okay. But very short term? No. It's not very short term. Because it is crossing the criteria of 3 months. So AS3 has given the maximum criteria up to 3 months. It is gone beyond 3 months. So first condition violated, boss. So this is your short term investment, current investments. Shares of TCS. I've invested in shares of TCS. Let's say 2 months. Very short term, liquidity also, both possible. Risk of change in value? High risk. Boss, in share market, who will sell that? Whatever money I'll put, my money, same money, I'll get it back. Is there anybody who guarantees the money in the share market? The advertisement itself says share markets are subject to market risk. Blah, 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 blah. They tell no mutual fund ads, share market ads. The person who is running the show itself is telling share market is subject to market risk. Then who are you and I to sit and give guarantee? So is there a guarantee that the money what you invest will never go low or never change? Impossible. Share market 100% it is significant risk. From 1 lakh it can become 0 boss. From 1 lakh it can become 10,000 boss. So the third condition is violated here. So this has to be investment, even though it is short term, even though it is liquid, because with click of a button, I can sell the investment. Buy, sell, buy, sell, buy, sell. Click of a button, game over. So it is short term, it is liquid, but risk is significant. So third condition violated. If any one condition also violated, this is your investment, not cash equivalent. Debenture of 2 months. I'm investing in company's debenture. Now here there can be a debate. ICA has taken a view that this is not a risky investment because 99% case, whatever money you gave, you'll get it back. Are you able to follow? So here ICA has taken a conservative view that debenture will be no risk. But if it is NCD, non-convertible debentures trading in the market, then boss, risk is there. So here from examination point of view, they have taken one stand. But in real life, you have to understand the scenario and accordingly classify. Guys, I'm telling you, every company does cash flow statement. I'm able to follow. So this is very important. So here, debenture is very short term because 2 months. Liquidity, after 2 months, money will come to me in form of cash. So liquidity, no problem. And no risk because whatever money I give, I'll get probably more than that only. I'll never get less than that. But not all debentures are like that. So, but ICA has taken a very conservative view. So hence we'll go with this only cash equivalent. Any problem? Any difficulty in this? Now, investments in shares are excluded from cash equivalents. Investment in shares are excluded from cash equivalent because shares are always subject to market risk. Even if you invest for 1 month, 2 months, it is not cash equivalent because it can become 0. So risk of change in value is very high. So shares can never be cash equivalents unless exception is there. Preference share of a company acquired shortly before their specified redemption date. So all of you know that preference share can be redeemed and the date of redemption is very much defined while it has been issued. This one company was issued the preference share 10 years ago. Now, 30 of June, this preference share is going to get redeemed, let's suppose. Now, what I did is, I sensed an opportunity. There's one person who's willing to transfer the preference share in my name. There's one person who's willing to transfer the preference share in my name because he's in urgent need of money. He wants money today. Why? Because he wants to construct house. For that, he needs money. So he came to me telling that, Pratik sir, I have this investment which is getting redeemed on 30 June. And they're redeeming at premium. So I've invested 1 lakh rupees. You will get 1,10,000 rupees. I only need 1 lakh rupees. Can you give me that 1 lakh rupees today? I'll transfer the share to your name. Because he's in need of money for constructing his house. So he's got fund flow crunch. So he wants some help. So now he's transferred the share in my name. I have purchased the share. Which share? Preference share. It is going to be redeemed when? June. Within 3 months. And preference share, all of you know, I get the same amount what is committed in the preference share certificate. In the certificate, if they told that I'll give you 110 means they'll give 110 only, which means change in value or risk of change in value is not there in case of preference share because preference share is not subject to market risk. It is not traded anywhere in the market. It is not subject to demand and supply. And hence, this type of preference share, which the maturity is happening in a short span of time, this, even though it is a share, you can treat it as a cash equivalent. So investment in shares here means generally equity shares are excluded from cash and cash equivalent unless they are in substance equivalent to cash. For example, preference share of a company acquired shortly before the redemption date. So what is the redemption date? 30 June. When did I acquire? 12th of April today. So gap is less than 3 months. Provided that there is no insignificant risk in change in the value of the amount. Means there is no doubtfulness of the company to repay the money. You have to ensure on 12th of April that there is no doubtfulness in repayment of the money. Doubtfulness is there in repayment of the money because if the company is suffering with losses, the company goes into liquidity. Then you know that the money is first given to whom? External liability holders. That time the money coming to you is risky. So if the company is not into that position, then the preferential what you invested for a short term period of 3 months, you can classify this investment as cash equivalent. Am I loud and clear? No energy. One more time, ask you. I want in chorus. Are you clear? Online people, are you clear?
Yes, sir.
Clear, sir.
Marketable securities, this is a term that we studied in 12 CBC. In 12 CBC, we studied that whenever the word marketable security comes, you should by default treat it as cash equivalent. But now in AS3, in intermediate, we've become a little bit matured. Marketable security, if it is no risk in change in value, then that is your cash equivalent. If any marketable security is there, which means the maturity is happening within 3 months, liquidity also is possible, but there is high risk of change in value, then that marketable security cannot be your cash equivalent. So marketable securities also satisfying those 3 conditions are your cash equivalent, otherwise not. In 12 CBC by default, now why I'm pointing out this, because this is a problem with CBC people. In 12 CBC you have learned that sir, marketable securities is cash equivalent. You have by hearted that. Now that I want to break the chain. Marketable securities with change of risk in value, with change of value, high risk of change in value, then it is not cash equivalent. If there is no risk of change in value, cash equivalent. So don't get carried away with the word marketable securities. You have to ask yourself whether risk of change in value is significant or insignificant. Understood? Now, cash flow. Sir, what is the meaning of cash flow? The flow of the money, inward and outward, is called as cash flow. Flow means what? The money is coming from outside to the company, inflow. Or from the company it is going outside, it is called as outflow. So cash flow is nothing but the inflow and outflow of the cash and cash equivalent. So cash coming in and going out. Cash coming in from the customer. Money coming in the bank from the customer, cash inflow. So cash inflow and cash equivalent outflow. Money coming in bank, money going out of the bank. Check coming in, check going out. So this is all inflow and outflow. Check issued, cash equivalent outflow. When the money clears from the bank, from bank money outflow. However, cash flow excludes movement between the item that constitute cash or cash equivalent because they are a part of cash management. For example, cash withdrawn from the bank for business. Can you please tell me the journal entry? Albert, journal entry. Cash withdrawn from the bank for business purpose. So cash account debit to bank.
Bank.
Is this inflow or outflow? Sir, inflow in cash, outflow in bank. Cash is one pocket, bank is my only other pocket. So I'm transferring money from one pocket to another pocket of my own pocket, my own company. Will I constitute this as inflow? Can I say 1 lakh rupees I've got from the bank, hence it is my cash inflow? Can I say this? No, I'm transferring money from one pocket to another pocket, boss. So this will not constitute cash flow. So any movement between cash and cash, or between cash to cash equivalent, or between cash equivalent to cash equivalent is never considered as flow. Flow means what? It is coming from outside, which is not my pocket. Outside to inside, inside to outside, but both should be not my pocket. One should be my pocket, one should be somebody else's pocket. If inflow and outflow is happening from my pocket to another pocket, then it is my no flow. Any problem in understanding this point? Cash deposited in the bank out of cash in hand. Transferring money from cash to bank. Shifting money from one pocket to another pocket. Flow or no flow?
No flow.
Online people, flow or no flow?
No flow, sir.
No flow. Wonderful. Now, sale and purchase of short-term marketable security being cash equivalent. Now they're taking marketable securities cash equivalent. And this you have purchased it. So money coming in or going out? Money going out, but money going out from to another pocket. I've taken money from cash pocket, investing in my cash equivalent pocket because marketable security is my cash equivalent. Which marketable security? That which has got no risk of change in value. So that is my cash equivalent. So any money going from cash to cash equivalent or cash equivalent to cash is my no flow. So all these 3 are the example of no flow. Any problem?
No, sir.
Sir, all this meaning from where did you take, sir? Not 12 CBC, my dear. AS. From your accounting standard itself. This is your accounting standard. Cash comprises of cash in hand, demand deposit with bank. Cash equivalent, it should be short term, highly liquid, readily convertible into cash, subject to insignificant risk of change in value. All these are your cash flow. Should be inflow and outflow of cash and cash equivalents. Cash equivalent meaning it should be up to 3 months or less than the 3 months of date of acquisition. Therefore, an investment normally qualifies as cash equivalent only when it has short term maturity, say 3 months or less than 3 months from the date of acquisition. So all this is coming from your AS3 directly. Cash flow excludes the movement between cash and cash equivalent because it is no flow. Transferring money from one pocket to another pocket is no flow. Everything is coming from your AS3. What is the meaning of operating activity? What is financing activity? Everything is been, I've just taken a summarized wordings from here and I've given in the summary notes. Any problem here?
No, sir.
Now, you want a break? Munji pada teri denek. 3 minutes plus 5 minutes. How much it is? 8 minutes break. 6:45 sharp is starting. Thank you so much.
Sir, can you show the PDF from the
One
first?
second. Yes, people, welcome back for the break. So let's continue. So before I start our discussion on the operating activity, one small question. I'm talking about investment. 2 conditions satisfied. Highly liquid, no change in the value. Who off switched it off? This is switched off or there?
There, sir.
Okay. On 24. Here the investment. Here the investment is going to be realized within 3 months, up to 3 months of the date of acquisition. So investment is highly liquid, no change in value. Realization within 3 months of date of acquisition. Please tell me what classification is this?
Cash and
Cash equivalent. Second, investment highly liquid, no change, but the maturity of this is happening within 10 months of date of acquisition. 10 months from date of acquisition. So this is your investment. Here in cash flow statement, we have nothing called as current and non-current. You just classify all of them into investing activities. But extra out of knowledge, I'm asking, if this is investment activity, what investment is current or non-current? Current investment, because the maturity is within 12 months, up to 10 months, but within 12 months of the balance sheet date, hence it is current investment. Maturity beyond 20 months. So highly liquid, no change in value beyond 20 months. So it is your investment activity as per cash flow statement. As per schedule 3 days, non-current in nature, non-current investment. So I'm able to differentiate between the 3.
Yes, sir.
Comfortable? Wonderful. Now, operating activities. Your AS3 says that operating activities are the principal revenue generating activities or ancillary revenue generating activities of the enterprise, and these should be those that other than investing in finance. If you take my opinion, first learn what is financing activity and learn what is investing activity. Anything that cannot fit under investing activity, anything which cannot fit under the financing activity will go to your automatically operating activity. So this is the residual category. This is the residual category. Anything that cannot fit the investing activity, anything that cannot fit the financing activity will go to your operating activity. So what is the meaning of investing activities? Investing activities are the acquisition and the disposal of long-term assets. Acquisition of asset means tangible and intangible assets acquired and sold, and other investments which are not included in your cash equivalents. Which are not included in cash equivalents. These both are not included in the cash equivalents. Are you able to follow?
Yes, sir.
These both are not included in the cash equivalents. Hence, it is your investing activities. Now, one question Yash had asked me in break, sir. You did one question here. Loan advance to friend. Why this is investing? Why this is not financing? Why this is investing? I said financing means what? When I'm raising the funds for my own business, when I'm raising the funds in my business, when I'm taking loan loan fund or capital fund. For me, it is financing activity. Here, we have advanced the loan to friend. In return, what am I expecting? Return, interest. So this is my investment. It's a type of investment. It is not pure investment, but it comes under investing activity. Can I put this under finance activity? Finance means raising the money. Am I raising money? No, I'm giving money. So this is not finance. Is this operational activity? Is my operation to advance loan to people? Is it my regular activity to keep giving loan to people? No, this is not my operational activity. So where will I put this? Investing activity. Any problem in this? Are you able to understand how do you classify certain things? Because this is a very judgmental part. Financing activities. Financing activities are the activities that results in change in the size and the composition of owner's capital. So earlier the owner's capital was 5 lakh. Now it become 8 lakh. From 5 lakh it become 8 lakh. What is the reason? So you've issued more capital, more equity share capital. You've issued more shares and more money is coming in, including preference share of a company and the borrowing, which means what? Any activity where you're raising the funds for the business. Finance means what? Raising the money for the business. Money can be raised in two forms. One in capital form, second is in debt form. So wherever you come across anything related to capital and anything related to debt, anything which is capital, anything which is debt, anything related to capital, anything related to debt. Two things I said. Anything which is capital, anything which is debt is finance activity. And anything related to capital, anything related to debt is my financing activity. Dividend paid. Dividend paid. Why am I paying dividend? I took money from shareholders. I took money from the general public. I gave the equity shares. So these are the equity shareholders. Out of the profit, I'm giving dividend. So dividend is paid because of the money that I borrowed from the shareholders. So dividend paid is related to capital. It's a finance activity because it is related to capital. I'm paying dividend to whom? Equity shareholder. I'm paying dividend to whom? Preference shareholder. From the equity shareholder, from the preference shareholder, I've raised the funds for the business. It's a financing activity. So anything related to capital is my financing activity. I took loan from the banker. In return, what am I paying? Interest. So loan is financing activity. Anything related to loan also is financing activity. So interest paid also is my financing activity. Any problem in this?
No, sir.
If this is understood, I would want to discuss multiple examples that comes under investing and financing activities. I tried to make a list of what all could come under investing activity. So can we go through one by one?
Yes.
It'll give you a better picture. Proceeds from sale of tangible or intangible assets. Tangible assets, sale of tangible assets, example. Land, machinery, land, building, furniture, fixtures, all these are my tangible assets. Intangible, goodwill, patent, all these are my intangible assets. That I'm selling, boss. So it's my sale of assets. When I put the money in assets, that is tangible or intangible. When I purchase the tangible assets, when I purchase the intangible assets, it is my investing. It is my investment in my assets. So it is investing activity. Therefore, the sale of that also is my investing activity. Proceeds from sale of investment. Investing activity means I invested the money in share market. I sold it. I got the money back. So cash inflow from the investing activities. Next, interest or dividend received of a non-financial company. Now, the company is bifurcated into two types. One is finance company.
Non-finance company.
When I say type of company, it's not that type of company what we studied in CA Foundation. One person company, private company, public company. This is not that type of company. I'm telling type of company from the business point of view. From the business point of view. So either you can be in a non-finance business, or you can be into finance business. Non-finance business means okay. First you have to understand what is finance business. What is finance business? My business is financing. I'm financing people. Whoever is in need of money, I'm giving money to them. So banking is into what business? Financing business. NBFC is into what business? Financing business. Kalpavriksha, KV, not coaching. I didn't say academy. I said KV, NBFC. So what is the work of Kalpavriksha here? To give money to those people who are in need of the money. So my primary revenue is what? I give money in two ways. I give money, in return, people give me equity shares. So I'm investing in equity shares of some company. I'm investing in equity shares of some company. That is my job. I'm funding the business. Venture capitalist. Venture capitalist. What is the primary motto? Funding. Or I can give the money in form of debt, loans. Banking. Let's talk about banking business. Banking companies. HDFC. Company or not company? HDFC
Company,
shares
sir.
are listed in stock exchange. Boss. So what is it? Listed public company. So HDFC, let's talk about HDFC. What is their business? Lending business. So they primarily give loans, debt, but they also invest in equity shares, let's suppose. So now, when I invest in equity shares in some company, let's say HDFC is investing in CA.Prathik Academy. So CA.Prathik Academy is paying dividend. Now I'm telling you, think from HDFC point of view. HDFC is receiving dividend from KVA, correct? No? In HDFC's cash flow statement, will this be cash inflow or outflow? It is inflow because HDFC is receiving money. Now, this dividend what you're receiving, is investing activity or operating activity? It is operating activity because the main operation of HDFC is what? Lending, no boss. So then this investment in equity shares and debt is not investment for these people. For these people, the main operation is what? To give money. So in that case, whatever return they get out of it, the dividend received will be the operating activity, not the investing activity. Same way, if I've taken loan from HDFC Bank, so I'm paying interest to HDFC Bank. HDFC Bank is receiving the interest. So it is cash inflow. No cash flow statement of HDFC. HDFC is receiving interest. So interest received by HDFC is what activity? So it is operating activity because it is main revenue generating activity. What is the meaning of operating activity? Operating activity means the principal revenue generating activity. For HDFC Bank, for an investor, for them, what is the principal revenue generating activity? Dividend received, interest received. Dividend is against capital invested and interest is against loan invested. So for them, for financing business, these both are operating activity. I'll be to understand what is finance business. Finance means what? Lending money. Helping, you're having too much money. With that money, you are investing in multiple places. In return, either you're getting shares, equity or preference, or you're getting interest out of it. That is debt. So this is finance business. Now, what is non-finance business? Who's not into lending business? Who's into goods and other services? If I'm buying and selling laptop, I'm into non-finance business. If I'm buying and selling gold, non-finance business. If I'm doing coaching business, it is non-finance business. So other than financial services is my non-finance business. Selling of goods, buying of goods is my non-finance business. So CA.Prathik Academy is what type of business? Non-finance business. Now please tell me, what is my principal revenue generating item? Coaching fee is my principal revenue generating item. So it is my operating activity. Selling of the books, ancillary. Yeah, selling of the books is my ancillary revenue generating item. Still, this is operating only. I have surplus money. I invested in share market or fixed deposit beyond 3 months. So now I get dividend. I get interest. I have extra money. I gave it to my friend as a loan. And that friend is giving me interest. So I have received interest. So in this case, dividend received and interest received is my investing activity because this is not my primary business. CA.Prathik Academy's primary business is what? Coaching. Investing money is not my primary business. Hence, if I get any inflow from dividend or interest, so that is my investing activity. Are you able to understand the difference between the both? Now, here we're talking about the interest and dividend received. The moment the interest and dividend is received, your question should be, sir, finance or non-finance? If it is non-finance, it will come in investing activity. If it is finance, go to operating activity. Hence, I've written that in bracket, interest and dividend receipt will come here only if it is a non-finance company. Had this been for a finance company, it is a main income, boss. So main income will go where? In the operational activity. Rent received from the property which is held as investment. Rent received from the property held as investment. So I have an extra property in the academy's name. I've invested that money and my purpose is to earn rent out of it. So that property what I bought is for investment purpose. So from that rent what comes also is investment purpose. Investment or anything related to investment is my investing activity. Any problem?
No, sir.
Any problem?
No, sir.
Insurance claim on asset received. Let's say there's a machine which I've invested, that machine met with an accident, fire accident or some natural calamity, and it got, useless. So now from the insurance company, I'm getting the insurance claim. So it's a cash inflow. What activity? When the asset was investing activity, anything coming related to that also is investing activity. It's an extraordinary item. It's an extraordinary item. It is not a part of your 7 classification of expenses. Are you to follow? So goods destroyed by fire, asset destroyed by fire, it's a loss. So that you take in the extraordinary items, not in those 7 category of expenses. What are the 7 category of expenses? Cost of material consumed, purchase of stock in trade, changes in inventory, employee benefit, finance cost, depreciation, amortization, other expenses. This loss on, due to fire or due to any other natural calamity, whether for goods or asset, it is not part of your 7 expenses category. It is an extraordinary item. Purchase of investment, which is shares, debentures, FDs, which is other than marketable security. Investment activity. When which marketable security which is got? No. Here purchase of investment other than marketable securities means which marketable securities? No. So here investment means which is other than marketable security means what? It is investment activity. In marketable, you have to check 2 things. If there is a change in value, risk is there, then it is investment. If change on risk is not there, it is cash and cash equivalent. Okay. Now below separately, I'll be giving extra notes here. Wherever you have a doubt. So here I'll put again same point here. Marketable securities with change in risk. Risk of change in value is your investment activities, and no risk of change in value will be cash and cash. Again, one more note below the format itself I'll give you. So it becomes easy for you to remember. Then purchase of tangible, intangible assets. Investment activity. Brokerage paid on the purchase of investment or asset. I'm buying a share. For that, I'm routing through a broker. I'm paying commission to broker. Any investment is investment activity, and anything related to investment also investment activity. I'm buying one asset machine from Delhi, and I've appointed one agent in Delhi. He is helping me to source the machine from Delhi. I'm paying commission to him. So if machine is investment activity, anything related, anything paid in relation to investing also is my investing activity. So brokerage paid on the purchase of investments or assets, both are investing activities. Purchase of marketable security having risk of change in value. Investing activities. Income tax paid on the investing activities, such as capital gain tax. I sold a land, I got a profit. On that profit, I have to pay capital gain tax. That goes to your investing activity. So if they give you general tax paid, so that tax paid is on operation. Means for the goods that I bought and sold, I had a profit, no? On that profit, I paid tax. So it is a tax on operation. So normally, if they give tax paid and leave it, it is my operating activity. But if they say that this is a tax paid for capital gains comes for what? Investments. Sale of your land, building, plant, machinery. On that, you had a capital gain. So tax what you pay, I cannot minus that tax as outflow in the operating activity. I have to minus that in the investing activity. So categorization is very important. Loans and advances made to subsidiary company. What is subsidiary company? Now let's suppose KVA Limited, and this is FFLA Limited. Now KVA Limited, or before that, FFA Limited, let's suppose it has got an equity share capital of 10 lakhs. In that, KVA alone has invested 5.1 lakh rupees, which means 51%. And remaining is coming from others, which is 4.9. Which means this 5 lakh is a capital in FFLA Limited, but in the balance sheet of KVA Limited, this is investment. So on the investment side, under that, investment in FFLA, which is subsidiary company. How it is subsidiary? Because I've invested 5.1 lakh. If I have to take a ratio, 5.1 lakh upon 10 lakh into 100, which means FFLA Limited has got its investment, 51% investment from whom? KVA Limited. Which means majority of the investment for FFLA is coming from whom? KVA Limited. Which means one company is investing more than 50%. Means what? Who will have more control? KVA. Guys, this 51% will determine the voting right. If 10 people are investing 10,000 rupees, so what is my total capital? 1 lakh. 10 people investing 10,000. So 10,000, 10 is how much? 1 lakh. So each person has got the share how much? 10%, 10%, 10%. So the voting right also is 10%. So your voting right is always in proportion to the share capital that you hold. So here 51% capital is contributed by whom? KVA. So can I say in decision making, 51% of the vote will be given by whom? KVA. So can I say KVA has got more influence on FFLA? By that virtue, now KVA Limited becomes the holding company. Because I hold 51% stake in FFLA. I have the controls of FFLA. If anybody is against me, if these 49% people are against me, I'm not bothered because 51% is under my control. So when I give voting power, I'll take the 51% control. In that case, FFL Limited becomes the subsidiary company, which is coming under the holding company. So like that, due to multiple reasons, a relation between the two companies can be established as holding and subsidiary. In that one example I took, that example is what? If a person is holding more than 50% stake, more than 50% stake, which is 51% stake. If any person is holding 51% stake in any other company, then the person who's investing in that company becomes the holding company, and the person who's receiving the investment is becoming the subsidiary company. Like that, there could be multiple other examples where a relation of holding and subsidiary company between these two companies could be established. That you will study in law. So now, KVA Limited is given 5.1 lakh rupees to FFLA. So can I say FFLA becomes my subsidiary? So the money that I've advanced is my investing activity because I've invested in FFLA. From that, I'm expecting dividend. So I've invested in that company. Any problem? And I don't become a finance company. Finance company means what? My job is to give money to everybody. KVA Limited is what? Coaching business. They've invested in subsidiary because they wanted something from FFL. So KVA Limited is not investing in everybody's business, boss. If I keep on investing in everybody's business, then I become a finance business. Just because of investing in subsidiary company, I don't become a finance business. My primary is non-finance business only. Am I loud and clear? So all these will be compressed under investing activity. Now let's see financing activities. Proceeds from issue of shares. When I issue share, I get the cash inflow of money. So I'm raising money for my own self. When I raise money for my own self, it is finance activity. I can raise money for my own self in form of equity share capital, preferential capital, debenture, debt, borrowing, loan, bonds, whatever name you say, public deposit. All these are the different forms in which I can raise money for my business. Financing activity means what? Raising money for my own business. So proceeds from issue of share, equity or preference is my finance activity. Proceeds from issue of debenture. I'm issuing debenture. I'm issuing bond. I'm issuing public deposit. In return, what am I getting? Money. Cash inflow of financing activity. I'm financing my business. Raising loan, borrowing from bank loan or third party. So again, cash inflow from which activity? Finance activity. Increase in bank overdraft or cash credit. Bank overdraft. What is bank overdraft? In BRS we studied. Bank overdraft is the arrangement given by the or facility given by the bank. Where bank says that if you want to withdraw the money more than what you've deposited, you're free to withdraw. For example, I have a current account. And this current account has got what facility? Current account with OD facility. Means what? I can withdraw the money. OD means what? Overdraft facility. Overdraft means what? Overdraw. I can overdraw the money than what I have. So you go and apply for this, they'll sanction a limit. When you go and open a current account, they will themselves ask, sir, do you want OD facility? We provide also. You say yes. So depending on your repayment capacity, looking at your income tax returns, they will say, sir, 10 lakh rupees means I can give you a limit of 10 lakh rupees. Which means if I have in my current account 5 lakh rupees, 5 lakh of my own money that I can use, plus if I am in need of further money, without bank's prior approval, I can get this 10 lakh from the OD facility. So how much money I can withdraw? 10 lakh more. So 15 lakhs in total I can withdraw. I'll be able to follow. So now the 15 lakhs payment that I've done, in that 5 lakh only is my money. So extra 10 lakh is whose money? Banker's money. So this is called as increase in overdraft. So now though this 15 lakh is cash outflow, but this is coming to you, then it's going out. So when I talk about increase in bank overdraft, I'm talking about the money coming in. Then you are paying it to the external people. Are you able to understand? So whenever there is increase in bank overdraft, that is called as raising the finance of the business. It is cash inflow of the finance activity. Bank overdraft is also called as cash overdraft. Also, it is called as cash credit. It is also called as cash credit. All these three are synonyms, you can say. Cash credit has got minor differences there, but pretty much all the same. Payment of final dividend to equity shareholders and preference shareholders. Equity dividend, interim dividend, preference dividend. You pay for whom? To the equity shareholders, to the preference shareholders. Who are those people? Those people have given money to my business. So I'm giving dividend to them in return. So if the money what I got from them is equity, so anything related to equity is also financing activity. Money what I got from them is equity, which is financing activity, and anything related to that equity is also financing activity. So payment of final dividend, interim dividend, everything is your cash outflow of finance activity. Here you have to take care of two things. One, classification of activity. Second is whether it is inflow or outflow. Two aspects should be very clear. The transaction that I'm talking about, whether that is inflow or outflow, that have to be clear. Second, whether this is operating, investing, or finance activity, that also have to be clear. Any problem? Payment of interest on loan, interest on debenture, interest on bond, interest on public deposit, all these are related to my debt. So if debt is finance activity, anything related to debt also is my financing activity. Decrease of cash overdraft means what? I'm making the payment back to the banker. I'm giving the money back to the banker. So it's a cash outflow. I took loan from him, no? I'm giving it back. So decrease in bank overdraft. When does my bank overdraft, when does my liability decrease? When I repay the money back. Increase in cash overdraft means what? Increase inflow means what? I've got money from the banker. I've got loan from the banker. Decrease in overdraft means what? I've repaid the money back to them. It's a cash outflow. Repayment of loan, redemption of debenture, redemption of preference share, payment of buyback of securities. All these are cash outflow. Buyback means what? I'm paying back the money and getting the shares back. So it's cash outflow. Which activity? Finance activity. Because equity was earlier finance activity. Repayment of equity is also finance activity. So repayment of loan borrowing, repayment of debenture, that is redemption of debenture, redemption of preference share, buyback of debentures, buyback of preference share, buyback of equity shares. All these are cash outflow of the finance activity. Payment of underwriting commission. What is underwriting commission? We have discussed in foundation.
The minimum subscription limit is not met, the members will subscribe.
Correct. In case the minimum subscription criteria, that is not 90% as laid on by SEBI, is not met, then the underwriters will fulfill the minimum subscription criteria, the gap whichever is there. So you pay commission to them. So that is my underwriter's commission. So commission you paid because he took a guarantee, sir, if the minimum subscription is not met, I will take the subscription. So that is related to capital. So this underwriting commission is happening because of raising the equity share capital. Underwriting commission comes when? In the context of issue of capital. Whenever there is a shortfall which goes below the minimum subscription criteria, the underwriter will come and do the job. So for that is charging commission. So this is work done in relation to what? Raising the funds. Underwriter will not come into picture unless and until I initiate my funding process. Underwriter commission or underwriter comes into picture when I'm issuing equity shares in the market, when I issue debentures in the market. So I don't want to go below the minimum subscription criteria. For that reason, what happens? I'm appointing an underwriter and paying commission to that fellow. So this is happening because of fundraising process. This is happening in relation to fundraising process. So fundraising process itself is a finance activity. Anything related to that also is finance activity. So I'm giving you a complete list of what is investing in finance activity. Anything which is not falling here will go to your operating activity. If these two are understood, that becomes easy. Now tell me what problem you have in this. What problem do you have in this? You become pro in this?
Yes, sir.
Wonderful. Let me check your proness in this question. Clear? Cash flow, financing company, non-financing company. Think and answer. Interest paid. Interest paid. Who's paying interest? Company is paying interest. Interest paid by financing company. Operating, investing or finance?
Operating.
Because interest is paid because I took loan. So loan what I took is for the purpose of my main business. So taking loan, giving loan. Taking interest, paying interest is my regular operation, boss. So for financing company, this is your operating activity. For non-finance company, interest paid is for debt taken. So for non-finance business, debt is my finance activity. Interest on debt also is my financing activity. Any problem?
No, sir.
Okay. Interest received for a finance company. I lent money, I got interest out of it. Lending money is my core business now. Boss, who am I? Finance company. So for me, it is my operating activity. For non-finance company, investing. I lent money. That is not my core business. I had extra money. I lent it. I got extra income. Investing activity. Now you're becoming pro. Now, dividend received.
Operating.
Dividend received.
Operating.
Finance company is receiving dividend. Receiving dividend is main business though. Boss, it is principal revenue generating item. Finance company. I invested in multiple companies because they wanted money, funds, and they're giving me dividend in return. So what is my main activity? Getting dividend, getting interest. So for me, it is operating activity. Sorry, right? Right. Investing potrika. Now you tell me what to do. Tappu. Okay. Now what will you do? Change it. Okay. How about non-finance company? Investing activity. There's a debate in this. Okay. Dividend paid. Dividend paid.
Financing activity.
Financing company.
Financing activity.
Still, it is financing activity. Why? Because dividend paid is because of the equity shares. Equity shares for anybody is financing activity. Whether I'm a finance company or a non-finance company, equity what I raise is always my finance activity. So dividend paid in relation to that also is my finance activity. Loan is not like that. Banker takes the money from you and give it for other purpose. So taking money, giving money is operational activity. So for a finance company, loan taken and loan given, interest received, interest paid is operational activity. But dividend paid is your finance activity and dividend received is your investing activity. Because in investing in some other company, the dividend what you get is investing activity is what the finance company says. But this is a debate point here. We'll discuss. Wait. What about non-finance company? Financing activity. Tax paid. Unless mentioned otherwise, it is all operating activity. This point alone, there's a debate. Do you agree with me?
Yes.
We'll wait. Apart from that, are you clear with everything else?
Yes, sir.
Everybody. The target for today is to strengthen your base for operating, finance, and investing activity. So classification should be very clear. Rita is very happy. In the book, enga paathamar irukke sir. Which book is this? தெய்வமே காப்பாத்திட்டியே அப்படின்னு சொல்றேன். Now, segregate the following transaction to operating, investing, finance activity, and cash equivalent. Can we do it?
Yes, sir.
No energy. Can we do it?
Yes, sir.
Now, cash sales.
Operating.
Wonderful. Cash purchase.
Operating.
Rent paid.
Operating.
Are you sure?
Yes, sir.
Sir, will it come in investing activity? No. Will received, no boss. When you invested in a building, you received rent, not you not pay rent. So it is operating activity. Now, so what I'm telling is all the mistakes you do here, not in exam. Cash in hand.
Cash and cash equivalent.
Cash in hand. Sir, cash and cash equivalent. Income tax paid. Nothing mentioned means operating activity. Office expenses. Operating activity. Balance at bank.
Cash and cash equivalent.
Cash and cash equivalent. Sale of machine by dealer of machine.
Operating activity.
Sale of machine, asset boss.
By dealer.
Sir, dealer of machine. He's buying machine, selling machine. That is his main business. Principal revenue generating item. So this is your operating activity. Sale of machine by KVA Limited. KVA is into coaching business. So if I sell the asset, for me the investment in asset is investment. Buying the asset is investment. Selling of that is also investment. So here, though it is looking like asset, it is not asset. For this particular dealer, this is a product. This is a goods. So buying and selling of the goods is an operating activity. For person who's using that item for long-term basis for more than 1 year, that is your asset investment activity. Issue of debenture, finance activity. Dividend paid, finance activity. Cash paid against a trade payable. Trade payable happens in the normal course of business. Any money paid is a cash outflow towards him. So it is an operating activity. Purchase of machine. So here they have not told I'm a dealer of machine, which means what? I'm buying the machine for the purpose of using it. Hence it is my investing activity. Income tax refund received. Inflow or outflow? Inflow. Nothing mentioned means operating activity. Issue of share capital. Financing activity. Sale of patent. Patent. Patent, intangible asset. Sale of intangible asset. Sale of investments, investing activity. Purchase of marketable securities. Now you have to ask a question. Sir, change of risk in value is there or not there? If change is significant, investment. Not significant, cash and cash equivalent. Nothing mentioned. So what will you take? There's no change in risk in value, or assume which? I will take a conservative view. I will assume there is a risk in change in value because marketable securities. Marketable security means securities which can be sold in market, subject to market risk. So we'll take a conservative view in real life. In 12 CBC, we took this as cash equivalent, but here we'll take it as investing activity. What is the rule here? There should be a risk of change in value. That is the assumption here. So in exam, if you're getting confused, state your assumption and do it. State your assumption and do it. Purchase of goodwill, investing activity, short-term deposit in bank. Now here, we don't know whether those three conditions are satisfied or not. So in exam, they'll give proper information. So you will classify this as cash equivalent if it is highly liquid, no risk of change in value, and maturity within 3 months. If that is the case, if all three conditions satisfied, this is cash equivalent. Purchase of security as investment itself, they're telling. Investing activity. Cash received from debtor, operating activity. Any difficulty?
No, sir.
Wonderful. We're not stopping here anyways. I made a list of questions to be worked out today. 10th question also is there. Identify which of them are operating, investing, and finance, and cash equivalent. Marketing expenses. Operating. No, see down and telling. Operating activity. Purchase of investment. Investing activity. Cash received from trade receivable. Buyback of equity shares. Now buyback you've completed. No, you become a pro in it. Now tell me. Financing activity. Repayment of long-term loan. Long-term loan. They didn't say loans advanced. I've taken loan. Taking loan is finance. Repaying loan also is finance. Commission received. Nothing mentioned means commission is always operating in nature. Principal, ancillary, other than everything, because this does not fit in finance activity. Do you agree with me? Finance activity, we pay commission on the underwriter. We don't receive commission. Investment, we don't never receive commission in that. So normally nothing mentioned means it is operational activity. Selling and distribution expenses. Nishi, where are you? Selling and distribution expenses. Operating expenses. Oh, sorry, operating activity. Redemption of debenture. Financing activity. Sale of marketable securities. Now, you have to ask yourself a question. This marketable security, risk of change in value is there or not there? Risk of change in value is there. Investing. Not there. Cash and cash equivalent. We'll put under investing activities. If the question is silent, it is marketable securities subject to change in the value. Risk of change in the value. Hence, it is investment activity. Bank overdraft. Increase or decrease doesn't matter. Increase means cash inflow or outflow. Bank overdraft increase. Bank is giving money to you, cash inflow. Bank overdraft decreased means you're repaying the money back, cash outflow. Both are finance activity. Any problem? Sale of investment. In who said finance activity? Investment activity. Dividend received on share. Dividend received on share. I have invested in shares, investment, and against it I'm receiving dividend. Investing activity. Interest received on investment. Rent received by real estate company. அப்பா சொல்லுங்கடா. கரெக்டா சொன்னீங்கன்னா அப்புறம் என்ன அர்த்தம் அந்த இடத்துல? Correct only you said. Real estate company. They invest into multiple, what do you call it, assets. And that asset, for you it is asset. For him it is product. For him it is product, no. He'll buy, sell. Buy property, sell property. Buy land, sell land. He'll buy the land. And from that he's getting rent. That is his primary source of income. So let's suppose I start one real estate company. My primary motive is what? My principal activity is to get rent. So I'm investing in multiple assets: land, building, commercial building, rental builder, what do you call it, essential building, multiple places. So now the major income of my company is what? Rent. So that rent is my principal activity, because my objective of the company is what? In the MOA, under the objective clause, I've told that my income source itself is rent. That is the objective of earning the money. That is the source of earning the money. So that in case if you're a real estate company, then the rent received on that investment becomes your operating activity. Operating activity. Rent received by real estate company is your operating activity. Rent received by KVA? Investing activity. Rent received by manufacturing company. What has manufacturing company got to do with the land? So he bought the land. Chumma it is there. He gave it to somebody. So land is investment for him. Rent from that investment also is investment activity. So this is your investing activity. Are you able to differentiate?
Yes.
Interest paid on debentures, finance activity. Marketable security, same, repeat it, leave it. Interest paid on bank overdraft, finance activity. Okay, now let me take one ICA question. Eighth question, practical question. Classify the following activities as operating, investing, finance, or cash equivalent as per AS3 revised. Brokerage paid for purchase of investment. Investment activity. Are you sure? No, this is ICA question. That was sample. This is main, real. Be careful. Underwriting commission paid. Financing activity. Trading commission received. Operating activity. Proceeds from sale of investment. Purchase of goodwill. Redemption of preference share. Rent received from property held as investment. Investing activity. Wait. Interest paid on long-term borrowing. Borrowing itself finance activity. Related to that is also finance activity. Marketable security. Oh, super ICI. High risk of change in value. High risk of change in value. Not cash and cash equivalent. It is investment activity. Refund of income tax received. Operating activity. Can we cross-check the answer?
Yes.
You will know it, sir. நீங்க சொன்னா கரெக்ட்டா தான் இருக்கும் sir. But still, brokerage, related investment, investing activity. Underwriting commission, finance activity. Trading commission, operating. Sale of investment, investing. Purchase of goodwill, investing. Redemption of preference share, financing. Rent received from the property held as investment, investing activity. Interest paid on borrowing, finance. Marketable securities, which is having a change of risk in value, not a cash equivalent. Please add it there. Investment activity. Please add it there. Refund of income tax, operating activity. Any problem? Next, you have to state whether the following would result into inflow, outflow, or no flow. So far, classification. Now, inflow, outflow. Sale of fixed asset at a loss of 45,000 rupees. So, at a loss of 5,000 rupees.
Inflow.
Sir, one thing is very clear, sir. Whenever I sell something, I get money. Inflow. How much inflow?
45,000.
So 50,000 is the book value of the asset. I sold at a 5,000 loss. Means out of 50,000 rupees, 5,000 rupees loss I will not receive. Means baki 45,000 received. So cash inflow, cash inflow, cash inflow. Any problem? Which activity? Investing activity. Purchase of stock in trade for cash.
Outflow.
Cash outflow. Operating activity. Purchase of fixed asset against issue of shares. Outflow, inflow. Outflow. 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 Purchase of fixed asset against issue of share. Outflow.
No flow.
Issue of share. Share is not your cash and cash equivalent. So money never went out. What is the journal entry for this? Asset to equity share capital. Where is the flow, boss? Clean, bold. No flow. Cash received from debtor. Cash inflow, operating activity. Cash deposit into bank. Cash outflow, deposited money going out. Sir, money going from one pocket to another pocket. So as per your AS3, there is no flow. So this is no flow. This is not considered as a flow. Cash withdrawn from bank, no flow. So issue of fully paid bonus shares. Issue of shares, sir. Bonus share means what? I issued the share, but I got nothing in return. Issue of bonus share is also called as capitalization of reserve. Scrip issue, capitalization of reserves, capitalization of profit. So no flow. Oh my God. Issue of share to the underwriter. No flow. Issue of share to promoter. No flow. Means issue of share for consideration other than cash. No flow. Sale of marketable securities at par. Cash inflow. At par means what? I'm not getting any profit, but I got the money, no? So cash inflow. Now, depending on what it is, we have to decide. Risk is there, not there. Accordingly, it will be either operating or investing. No, if it is beyond 3 months. That's what I don't know. 3 months or no 3 months. Risk of change in value is there or not there. It depends on all the factors. So if you say that at par means no risk in change in value, it is coming within 3 months, cash and cash equivalent. Beyond 3 months, it is investment. Okay. So here they're asking inflow or outflow. So our classification is inflow. Declaration of final dividend. Declaration mein payment doesn't happen. After declaration, to make the payment separately. Just they have declared this in AGM. So it is no flow. Declaration of dividend means outflow they have put here. Shareholders have approved the dividend. Declaration of dividend is paid within 30 days of declaration. Technically, what it should be here? Upon declaration, no flow. When the dividend is paid, it is outflow. Had they told the word declaration of dividend or dividend declared is paid, then it is outflow. So here, the question needs to be more clear is what my suggestion is. Writing off the bad debts against the provision for offer debt. No flow. Declaration of interim dividend. If it is paid, it is outflow. Otherwise, no flow. I've just declared the interim dividend, but I've not paid it. Then it is no flow. Sale of current investment. Inflow. Increase in bank overdraft. Inflow. Decrease in cash credit. Outflow. Increase in overdraft. Inflow. Decrease in overdraft. Outflow. Check deposit with bank. One question is a check deposit with bank.
No.
I'm moving from one pocket to another pocket. Check in hand is my cash equivalent. I'm depositing in bank. So the money comes in bank, it is my another pocket. From one pocket to another pocket, no change. This is for tomorrow. Any problem? No. So what is the agenda for today's session? Today was to discuss classification part should be clear. So tomorrow, we have class from 10 to 12. So there I'll try to discuss what is direct method, what is indirect method. And we will start our preparation with indirect method first. Once indirect method is done, then we'll go to direct method, which is very, very easy. In exam, the highest amount of question that comes is from the indirect method. But yes, at times here and there, direct method also has been tested upon. So we have to focus on both. So now, please stay back because I have to discuss with you the schedule for upcoming week for test point of view. So online people also stay back, but officially I'm closing this video for everybody else. So guys, that's all from my side for this session. I'll see you tomorrow morning, 10 a.m. sharp. Until then, bye-bye. See you. Take care.